Hey there, welcome back to another edition of the Premier Investments and Wealth Management Financial Program. My name is Doug Wagner. I'm your host, and I'll introduce the three gentlemen with me here at the table in a matter of seconds. But first, I want to remind you that you should, if you're wondering about whether you're ready for retirement, you're not alone. More than half of Americans don't know if they're ready for retirement. You could be part of the better half of that. Go to premieriwm.com. You can use your phone. You can use a laptop. You could use a tablet. You can even sit there at your desktop. premieriwm.com. Click Get Started. Answer a few questions, and they'll provide for you a one-page Premier Vision document that really will help serve as your financial roadmap for the future. Are you ready for retirement? Maybe your kid's education. Maybe you've got the dream of purchasing a lake house or a little hunting cabin up in the Texas Hill Country or southern Iowa to go pheasant or deer hunting. Any way you look at it, you need professional help in order to get to these places in your life you want to be. premieriwm.com is the place to go for Premier Investments and Wealth Management, named to Forbes 2025 Best in State Wealth Management Teams. Or you could call 800-383-6590. Sitting to my right, new sheriff in town. He's a vice president of the firm, Wealth Advisor Well. Hey, Elias, how are you doing? Elias Randall.
Doug, hello.
Good to see you. Almost football season.
It is almost football
Ready?
season. Yep. Yeah, I stay ready.
Let's do this. I'm serious. I'm excited about this. These final days of summer, we're getting into fall. I'm excited. Jonas Everett is a wealth advisor with over 30 years.
He almost threw his flag out. I almost dropped my water there. Elias almost threw his flag, called a penalty on me.
Jonas has got over 30 years of experience in the investment industry. Jonas, are you ready for football season too?
I'm all set.
Okay.
I'm not quite sure what I'm more excited about, college or pro, but I'll decide.
I know. I'm trying to figure that one. We'll get there, though. We will get there. President and Wealth Advisor, Premier Investments and Wealth Management. He's an accredited investment fiduciary. He's got over 22 years of experience in the investment industry. You know him as Roger Abel. We know him as the Big Kahuna, the head coach with the most. He's got it going.
There's another
flag.
Roger, how you doing?
I'm good. I'm just getting ready to work on my head coaching skills.
There you go.
Also known as fantasy football.
Yeah, exactly.
I started watching fantasy football
videos
really? About a week ago.
Okay.
Yeah.
Getting ready to go.
NFL preseason. Didn't that kick off the 31st of July or something, did I see?
Yeah, it's crazy.
Yeah,
so it's
ready.
like you've got Hall of Fame games and you've got all these other games that, head into there. So it's going to be an interesting football season, to
I
say the
love
least.
fall.
Yeah, I know.
Definitely my favorite holiday.
Exactly.
And fall is a holiday.
What's that?
Fall is
a
a
holiday. It's one.
Yeah, fall is a holiday.
Premier Investments and Wealth Management. Hey, there's a couple of other things over there. They've got a financial wellness quiz over at premieriwm.com. Find out if you're on track for retirement by taking that as well. We have listener questions today, and I love listener questions, and I know you all love the listener questions too. So I'm going to start out, since I haven't seen you in so long, Elias. I'm going to give you the first question. Ready?
Yeah, I'm ready. Let's hear it.
John asks, I'm 58 and I just got laid off after 25 years with the same company. No pension, just my 401k and a small emergency fund. I've always assumed I'd work until 65 or 67. I want to make a smart decision, but I'm overwhelmed and I'm just not sure where to start. How do I figure out if I can retire early or if I need to get another job? What would you say to John?
Step one, you call Premier and come meet with us.
There you go. 800-383-6590.
That's a wrap.
Yep.
Show's over. That's all you need to know.
So I think a couple things come to mind. And I think, one, you don't want to rush into any decisions. Mm-hmm. You want to make a good decision. And I think this is we talk about in our business all the time, how people have life events, and then that's really motivating factor for them to come in and have a meeting and get some of these questions answered. And this is a pretty common one.
Yeah.
Being laid off closer to retirement. And, if you're John, and what if you're financially independent right now and he doesn't know it?
Yeah.
Well, if he is, does he want to go back to work?
Exactly.
Do you even want to go look for another job? So I think, one, don't panic. This will give you some time to make a good decision. Mm-hmm. And, if you want to start getting stuff together, take an inventory of what you have. That's another good step too, because any any firm you go to, they're going to want you to disclose all of your statements and documents and the things that you have.
Right.
So really, first things first, are you already financially independent? And if you are, then you have more flexibility.
Mm-hmm.
If you are not to that point yet, then you might want to start looking for a job.
Yeah, it's interesting, Jonas, because he talks about having just a 401k and a small emergency fund. And so maybe he doesn't have the other things that you work with clients on a regular basis, IRA, Roth IRA, as well as sort of a cash investment account as well.
This exact same thing happened to a friend of mine at League. He came up to me and he was laid off from the gas company. And I like what Elias said there, that I know that there's a lot of emotions involved, but if you take an inventory, and I know my friend has done a good job saving money, and I tried to make light of it with him. I actually bought a inflatable axe, and I went the last league. I was like, hey, you just got axed, and now you're getting axed again.
Time out, wait a minute.
Trying to make light of
league?
it.
What league is this?
Bocce ball league.
So you have an inflatable axe.
I have an inflatable
and you have
axe.
soft bricks.
Soft bricks.
Soft bricks.
I
Yeah,
probably
all the
supplied
props.
those for you.
But
Run a movie theater here.
almost, so many props. Where's the rubber chicken, right? So half of Americans are going to retire unexpectedly.
Right.
And there's only three ways to look at it. There's three off ramps or on ramps, however you want to look at it. You're going to retire early, you're going to retire on time, or you're going to retire later than you expected.
Yeah.
And if you have that mindset going as you're nearing retirement, but I think the best thing to do is to plan and look at not working full time as a milestone, not as something horrible, especially if you get laid off. It's still a milestone, but if you've planned for that, it's going to make it a lot easier for you.
It's interesting because go ahead. Sorry. Brian.
Well, you hit on a good point, and people's expectations of how long they're going to actually work don't align with when they actually retire. And here's how I know this. I teach a class for a couple local hospitals, and one of the statistics in there is that 30% of the population believes they will work until they're 70 or they will work forever. The reality is only 6% of the people make it to 70 working. So what that really tells me is that, number one, people retire earlier than they're planning on, whether it's a layoff or they got a financial plan. They realize they no longer have to work. You should plan on, in my opinion, retiring sooner than you think you're going to. Because the reality is, that's what's going to happen.
Exactly where I was going to go. So
if you
thank
work
for
5
hitting
years
that.
longer, okay, then it's all gravy. But if you plan to retire at 62, but you work till you're 65, we're all just better off.
Yeah. No, it makes sense. We're talking about John's question. He's 58. He just got laid off after 25 years with the same company without a pension, just 401k, and a small emergency fund. He said, you know what, maybe I've always thought about working until 65 and 67. He feels kind of overwhelmed right now, and he wants to figure out if he can retire early or if he needs to get another job. The big thing when you do a financial plan at Premier Investments in Wealth Management, they talk about all the different things that are potential incomes. Jonas hit upon a little bit earlier. Talk about all the things like the potential for gig economy, the potential for part-time jobs, even Social Security, and how the timing for that and your income needs might work.
Well, it depends on, apparently he's 58, so he's got a little challenge, right? You don't have a ton of liquidity in your 401k yet. There are ways to access that. If John has done a great job saving, and he's done a financial plan and shows he doesn't have to work, he doesn't need to take Social Security, there are ways to get into that 401k without a penalty. And a lot of people don't know that, which a little bit it goes to my thesis of, I think, why people end up retiring sooner than they plan on retiring. They realize there's ways to get into these investments without having a penalty. Most people, if you say, when are you going to retire, the earliest they'd ever say is 60.
Yeah.
Because that's when they believe they can get in their investments without a penalty. But once you figure out, okay, I've done a plan, I don't have enough to sustain myself just in this 401k. I'm going to have to work 4 years. There are options, right? You could find something you love doing You could do a gig economy. I've seen people who this has happened to. They make more money after they got laid off than they did before. They become a consultant and they don't realize what the opportunities are outside of employment by a traditional employer.
Yeah, and that makes sense. Wanted to talk to you a little bit, Elias, about the idea of, we said many people, they think, I'm going to work till 65, 67, I'm going to work till 70. They end up retiring early. And for a lot of those people, the reason that happens is because of healthcare issues. Talk to me about healthcare and retirement for somebody like John, who's 58, thinking he's going to work another 7 to 10 years.
Well, healthcare, it's a wild card for people, and it can be expensive. And it is a cost that you're going to want to pay because you do need some sort of care. So whether it's your COBRA options through work, getting an Affordable Care Act plan in the marketplace, if you have a working spouse, maybe you can get covered on that plan. I think the best route to go is to just look at the different options you have available, get educated on what's going to be what, and then you can make a good decision. Because you'll be 65 when you can enroll in Medicare.
Okay, so 65 is when Medicare availability begins.
Yes,
okay.
yeah.
Gotcha.
So you'll be 65 when you can enroll in that. So you're going to, for most people, you're going to have to do something until that age.
Okay.
And you can get enrolled in that
I
program.
got a question. So we do a lot of financial plans. How many of your customers at 58 know how much health insurance is going to cost?
When they're 50, none.
None. Guess what does? The financial planning software can help them estimate the cost. Drag healthcare in, it takes the average ACA based upon where they live, what state they live in, and then how much they're making, and determines how much it's going to cost them out of pocket. So a lot of people, the missing puzzle of early retirement is, can I afford the health insurance?
Yeah.
We can say, well, if an individual needs $5,000 a month for their bills, I bring in the health insurance, the software will estimate it for us. We can bring a lot of confidence to people that don't know what they're going to do with health insurance. Yeah, I've been doing this since 2002. And I remember, and you remember this too, I'm sure, because back in 2002, we still did health insurance. We were just getting started, so we'd sell health insurance to people. And in 2002, the first thing I would ask somebody about if they wanted health insurance, what's your health? Like, can you get it? That was the first thing I'd ask somebody. Today, I don't ask what's your health. I ask, how much can you afford to pay? Because for an individual who's 58, it's likely close to $800 or $900 a month.
Yeah.
So the question now is, can you afford it? So it's really transitioned the health insurance conversation over 20 years from, are you healthy, to can you afford it?
We back in 2002, Doug, we were looking to see if they had the pocket for cigarettes first before we asked them anything about their health.
Yeah. Are you smoking or not smoking?
Yeah.
And exactly. I real quick, I understand how John is very bummed out here. And my biggest, I guess the biggest rock in my shoe that I have is his small emergency fund. If he were to come in and do a plan, we would address that
Jonas loves
right
his
away
emergency
because, even before exploring some of these health insurance premiums that he's going to have, he's going to have to make some serious adjustments and get an emergency fund that is going to at least take him, bridge the gap between 58 and when he decides to draw Social Security.
But the emergency fund could be the 401k.
Right.
That's the missing puzzle. We don't know how much he has in this. He might have $3 million and totally be able to set
this up. He says a small emergency fund. It could be like $50,000. You just don't know it. For
small
him,
is relative, right? If you have $3 million, you might have $150,000. You don't know.
Exactly. Premier Investments in Wealth Management at premieriwm.com. Go to the website, check it out, and while you're there, click on Get Started, answer a few questions. They'll provide for you a one-page Premier Vision document and an opportunity to sit down with a professional wealth advisor like Elias, like Jonas, like Roger, any one of the staff. They're going to be able to sit down with you and talk with you about what your needs are. I really love what Roger talked about, is that you don't know how much health insurance costs, but you know what? The financial software that they use does. And that's part of what you go to a professional for. I mean, you just don't go to somebody who lays their hand on you and said, ooh, I think you got X condition. They don't do that. You don't do that with. Does your doctor do that? No. Okay, good.
No.
I'm glad to hear that. But the whole point is you go to a professional for a reason, and that's why Premier Investments in Wealth Management is there for you. They were named Forbes 2025 Best in State Wealth Management Teams. Go to premieriwm.com or call today for your appointment, 800-383-6590. Finishing up with John's question here. One thing for me that I noted right away is that he does a lot of talking. He doesn't mention a spouse, a significant other, anything like that. And for me, it's one of those where he could have a silent partner that's out there that we don't even know anything about at this point, who maybe's not been involved with his investing. When you bring in people, you say, hey, if you're a couple, we need to see both of you because you both play a part in this.
Well, we hope so if they're both going to be involved, right? Mm-hmm. And that is true. We don't know that from this question. But I think here's what I think the next steps are for John. Mm-hmm. You're going to want to build out a retirement readiness plan. And then also just consider, like, what is your plan B going to be? Do you maybe need to work part-time to have some extra income? And I know some retired, I was just talking to a friend of mine who's retired the other day, and he's a golfer. So in his retirement, he mows at the golf course and plays golf. And to me, that sounds pretty fun. Mm-hmm. That kind of sounds like a fun way to be retired. Yeah. So I think there's plenty of options out there. It's just going to take, some planning and putting some thoughts together. It's really just never like a yes or no answer. Mm-hmm. There's a lot of moving parts involved. Yeah.
We talked about making sure you do things that make decisions with less emotion and more forethought and thinking ahead of time, Jonas, making sure that you get out in front of it. Just take your time.
Yeah, if one of the real disasters, financial disasters that we see people is they make bad emotional decisions. They get laid off. They start taking lump sums out of their 401ks. Mm-hmm. I had a family friend that started to do this. We talked about this, Roger, on another podcast, that if you start, no matter what the balance is, you start clipping away $35,000 and you got to pay taxes on it, $20,000 the next time, $50,000 the next time, you're killing your golden goose. Mm-hmm. You're not going to get any more golden eggs. So, I if I were John, I'd be very cautious about making any emotional decisions. It's all mathematical. Come in, do a financial plan, see how the math pencils out.
Makes complete sense. Premier Investments in Wealth Management, 800-383-6590, or make your appointment online at premieriwm.com. Listener questions this week. We're talking with Brody, who asks, I recently inherited $100,000 from my grandmother. She worked hard her whole life, lived simply, and saved carefully. It means a lot to me to do something smart with this money. The problem is I'm nervous about investing it right now. Keep hearing that the stock market's at an all-time high. It feels like I'd be buying at the top. Part of me wants to wait for a dip, but I'm also afraid of missing out if the market keeps climbing. Roger Abel, what's the right move?
The market's going to continue to keep climbing. I think this is an ironic question that came in based upon the episode 2 episodes prior to this, as well as a podcast we just did where we actually talk about understanding that the market hits an all-time high on average every 19 days. And an all-time market high is not a flaw of the stock market. It's a feature. That's good. And really, I think the first thing to understand is you're not alone. Lots of people feel this way. Okay. But and people want to buy low. And we have to almost quantify low. Is it a lower price than it is today, or is it a relatively low price to where the price is when you want to buy? And I think one of the things that you need to think about is typically the best time to buy was yesterday. Jonas, I think right after our last episode, you came out and we were talking about this chart, and it shows and compares, maybe Molly can post this, investors who buy on the all-time high versus the dip buyers since 1989.
In 1, 3, and 5-year increments.
1, 3, and 5. Outperformed by almost 20% when you buy at an all-time high versus trying to buy a dip. Okay, because what happens? The market is $100 today, and it goes to $110, and you're like, well, I'm going to buy a dip. Well, then it goes to 115.
Yeah.
And then it dips to 111. You bought your dip at 111, which you could have just bought it at 110. So I think you could go download the guide. We wrote a guide on this. It's at premieriwm.com, and it's how to invest at stock market highs. And I think it's really good education. And I'll be honest, until we did the research on this, if you would have told me that you're better off buying at an all-time high versus waiting for a dip, I would tell you I didn't think the math would pencil out.
Seems counterintuitive.
Counterintuitive. It's counterintuitive because what have you been told your whole life? Buy low, sell high. Well, at the end of the day, low is a relative value.
Right.
I think the beauty here is, Brody, don't be fearful of this. Most people are. But go get your financial plan in place. Figure out what this $100,000 means to you in your financial picture.
Yeah.
It could be you don't have an emergency fund. So maybe, as Jonas would tell you, you need to go take, 20, 30, 40,000 this for an emergency fund and invest the rest. I feel like a lot of people who are nervous about investing a big chunk of money likely have never had this amount of money before. I'm gathering, I don't see how old Brody is, but I'm gathering Brody's not that old.
No.
That's what I take from this. So if you're 23 and you ran into 100,000, you haven't been through any market cycles yet, you would probably be fearful. But I think the best thing you can do is go get some financial coaching on, hey, how does this make sense in my overall long-term picture?
And the nice thing about this, Jonas, is he seems very based in this whole thing because he said, hey, my grandma lived simply, worked hard, and I want to do something smart with this money. So again, you'd be, let's get a spare tire and another spare tire going. But the other thing, too, is that take a look at this, because if you've got a long-term investment horizon, you're always buying low, no matter when you're buying.
Yeah, we talked about this. Inheritances versus a 401k, there's more heartstrings attached to inheritances. It's tougher for people to invest. But if Brody has 100,000 in his 401k, he's probably in the market. But this is the same amount of money. This is $100,000 inheritance, and it really depends on his age. But yeah, if he has a 15-year time horizon, and then really, I like the idea, guys, that if you are nervous, who's to stop you from just putting some money in each month? And if you have some long-term, if Brody decides that a part of this 100,000 is going to be his retirement, and this is how I would help him. You tell me, I'd give him a piece of paper, write down how much of this 100,000 we need to do. I love my spare tires, Doug. So that's got to be first.
Tires.
The emergency fund's got to be first. But how much of that 100,000 would you like to put away for your retirement? He writes his number down, and then we can start there. And if he's nervous about the market, the market is not going anywhere. It's never going to go anywhere. We can actually put money in each month, and if that makes him feel better about it, even though Roger has the data that says that he might miss out on some returns, if he's more comfortable with that, that's the name of the game with the financial plan too. It's got to be comfortable. It's got to be a level of comfort for the customer and the advisor.
Right. And Elias Randall, we're talking about, a younger guy, maybe 20s, 30s, say maybe 35, up to 40, the max at this point, or something like that. It feels like the idea that he's got so many opportunities out there in order to put things together. I mean, what's the money meant for? I mean, Jonas said, okay, we'll write that out. And also, you've got so many different instruments that are out there. You've got stocks, you've got bonds, you've got mutual funds, you've got IRAs, you've got Roth IRAs. There's a lot of things that can figure into this mix that can get kind of confusing really quickly.
There are. And the basic question in investing is, what are your goals for the money and what is your time horizon? That's about as simple as you can get when you're making decisions. And I think in this case, especially if you're a younger investor, I do like Jonas's idea of dollar cost averaging, right? Here's the amount I'm going to do every month. Because really what you're doing is you're saying this is going to be my strategy, and then I'm going to stick with it. right? So if you're going to do something like that, you need to come up with the strategy and stick with it. And a couple other things I'll point out here from the notes, and Roger was getting to some of this with the data he was sharing. So all-time highs are very normal in the market. The market spends a lot of time trading near all-time highs. And the other day I heard someone say it's a persistent number. So the new, and it happens every 19 days?
Every 19 days.
Right. So every 19 days, we're getting a new all-time high. So that's much more persistent. And these companies, at the end of the day, they continue to grow their revenue. So their stock price should go higher. But those numbers persist throughout time.
Right.
The market going down and staying down has never persisted throughout time.
Mm-hmm.
So I think time is on your side, and it's easy to get scared when the market's high, and we talk about that all the time too. Is well, okay, it's hard to get in right now, right?
Mm-hmm.
Hard to get in.
It's time to buy.
When it's hard to get in, that's time to buy because it's hard for everyone. And the market being high isn't signaling, right? It's signaling growth in the stock market and the economy. It's not necessarily signaling that there must be a correction because the price is high today.
Right. It's interesting that when we were talking about this, because there's so much that goes into this. If you're an individual, you may say that's way too much for me to wrap my head around. That's why the professionals at Premier Investments and Wealth Management are here for you at premieriwm.com. You need a partner like Premier Investments and Wealth Management to help you make these decisions about your retirement, about so many things in life. Get in touch with them today online at premieriwm.com. Premier Investments and Wealth Management named to Forbes 2025 Best in State Wealth Management Programs, or call 800-383-6590 for Elias, for Jonas, for Roger. I'm Doug. We'll talk to you next week.
The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments and Wealth Management and LPL Financial do not provide specific individualized tax or legal advice. We suggest that you discuss your specific situation with a qualified tax or legal advisor. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Rebalancing a portfolio may cause investors to incur tax liabilities and/or transaction costs, and does not assure a profit or protect against loss. Dollar cost averaging involves continuous investment in securities, regardless of fluctuations in price levels. Investors should consider their ability to continue purchasing through periods of low price levels. Such a plan does not assure a profit and does not protect against loss in declining markets. Forbes' Best in State Wealth Management Team's ranking was developed by Shook Research and is based on in-person, virtual, and telephone due diligence meetings, and a ranking algorithm that includes a measure of each team's best practices, client retention, industry experience, review of compliance records, firm nominations, and quantitative criteria, including assets under management and revenue generated for their firms. Investment performance is not a criterion because client objectives and risk tolerances vary, and advisors rarely have audited performance reports. Shook's research and rankings provide opinions intended to help investors choose the right financial advisor and team, and are not indicative of future performance or representative of any one client's experience. Past performance is not an indication of future results. Neither Forbes nor Shook Research receive compensation in exchange for placement on the ranking. For more information, please see www.shookresearch.com. Shook is a registered trademark of Shook Research, LLC.